Hi everyone and welcome back to another video. Today we have had a very exciting day in the market with what seems to be some bullish CPI news. Everyone getting excited, Twitter going crazy saying yes, this is it, it's the breakout. But I'm here to say, sorry guys, I don't think we're just there yet. I think we are at a key level where we can expect a reversal in the market, because I had a look at high block capital earlier. A lot of liquidation levels are at the 16,600 to the 16,400 zone. And that is telling me that these people that was long in this big breakout here are not taking profits yet. And as you guys know, I was building longs at the 15,900 level around here, and today I have actually taken extra profit up here. I tweeted out earlier just when I was taking profits, just an extra bit of percentage, just to be able to remain calm, unemotional, and leave the rest to ride no matter what. So this is going to be a video on remaining calm, because in an exciting day in the market, we have the Fed speaking tomorrow. You know, these things can just reverse on a dime. People can change sentiments so quickly. So as everyone's getting excited off the news up here, right here, everyone's getting excited. Remember when everyone was fearful of the FTX news and the big scary narratives down here? I think the same thing applies up here as we get some bullish news at resistance, because you will get people now longing this breakout, what seems to be the breakout here, longing and buying into the market. And I think this candle is just designed to suck in some buyers, just like this candle down here was designed to make people sell. So what I can see happening in the coming days is, obviously we've left a big upper wick here on the daily time frame now, and that could come in and get filled by the end of the day. But to me, what I can see happening is something like this: come up to the top of this wick here, fill the daily wick here, and then look to consolidate as the Fed come in and speak and maybe reverse things and people get scared again. We get a drop in the market in an ABC fashion, something like this: 1, 2, 3, 4, 5 for your C wave, and come in and take that long liquidation levels where people who was long in this big bullish candle have not taken profits yet. And in my opinion, that's probably a bit of a mistake. But of course, what do I know? I'm not a financial advisor. I'm not a professional at this, so it's just my opinion. But really, in my opinion, keeping a level head in these exciting times, just like we was keeping a level head in these scary times down here. So making the right decisions at key points can be hard with news and everyone getting excited or scared on Twitter. But really, if we stick to market structure, what's screaming out to me is, come on, let's go out and take this long liquidation level here. Before then, we can get ready for the actual move to the upside. So I'm going to go through some things now, how we can try and get some measurements for the downside, how we can really start to see how this market can be manipulated to the upside in the short term, and then move down and get some proper targets for then really trying to analyze how the market will be moving over the next coming weeks. So just sticking on the daily time frame for now, as you can see, what we've done here is this trend line that we had to the upside, wick, we've just come in and had that Fed trend line retest. That's all we've done. So no matter what people are saying about CPI or the excitement, all we've done is come in and test this Fed trend line to the upside. So in regards to the move to the upside and then looking for the move to the downside, how can we, without Fibonacci's, get some levels to the downside that we can possibly be looking out for? And we can just do the same thing here. Have a look at this trend line to the downside, wick. Now imagine we get a reversal from this point into the middle of December, coming down and take this long liquidation level right here. Imagine that, wick below, and then close back above, and then get ready for the move to the upside, looking for what seems to be, in my opinion, nice accumulation heading into the new year where we get the real move. So I think obviously everyone would be getting really scared again at this time, as everyone's getting really excited at the top right now, in my opinion. So all we need to do is watch out for the big bullish news up here, maybe take some profits. I don't know, I'm not advising you to do anything. If you had longs built down here, possibly take a percentage. If we go up, you know, we can ride it unemotionally and win either way, but then profits can be utilized if we do get that ABC back to the downside. 1, 2, 3, 4, 5, something like that. I can really see that playing out. come back down, take this liquidation level, and then look to consolidate and move to the upside. But I think we are still in the range. I don't think there's too much to get really excited about at the minute, even though if I was to come on here and say, yes, this is it, massive breakout, here we go, that's going to be the video that gets probably the most views and, you know, get everyone the most excited. But I just can't come on here and do that. I think I am aiming now to the downside, and I think what we are seeing is, with this rejection today, nice big wick left to the upside, come in and fill that wick to the upside, get everyone bullish, majorly bullish again. I think then that would be the sign to then come in and look for the move down. I do think this candle is just sucking in buyers before then the move down, just like this candle was sucking in sellers for then the move up. So really what we can do is, if we do just take the Fibonacci's, imagine we are coming up to this wick to the upside. Look where them 618 and 702s line up for the move back down, right below that long liquidation level. That is telling me, come on guys, don't get too excited. Ready for the move down, and then we'll get excited as everyone's scared again, because we only really get excited around here as the news is bad, as the price is going down. We can never, I'm never going to advise, you know, to buy these pumps to the upside. It's just not what I do. It's just not how I work, and I'm never going to tell anyone to do that. I'm not going to tell you to do anything actually, but really these moves to the upside, big bullish candles, in my opinion, are there for taking profits, not for buying. So if we have a look now on the weekly time frame, we can just get a bit of a better idea of what's going on and how we can expect the market to move in the coming days, weeks and months. So the way this is playing out on the weekly time frame now is absolutely excellent, because as you can imagine, this wick down here, everyone now looking at this weekly candle with 5 days left. Remember, there's 5 days left of this weekly candle. This can turn into absolutely anything at this time. So obviously breaking this, what seems to be the range now, to the upside, sucking in buyers. One thing I've noticed is, if I just extend this liquidity level that we put out earlier to the left, have a look at that. Have a look at the reaction from this upper wick here and this downside wick here. It's perfect, and that really gives validation to this weekly level and daily level. So if people are bullish right now and you've been maybe too scared to buy down here and just want to buy up here, just question why that is and what this candle is doing to you emotionally. Is it giving you a fear of missing out because you just think we're going to fly to the upside now? And base your decisions, in my opinion, off that, because if you are starting to feel like FOMO or too scared to do anything, the market is doing that to you for a reason, because every single candle is designed to make you feel a certain way and make you make the wrong decision, basically. So with 5 days left, this candle can turn into anything, remember, and get closed back below this wick. Everyone at that point, if we start moving down, will be saying, you know, we've retested this range and here we go, we're going lower, we're going way lower. And at that point, as everyone's screaming for lower and scary narratives come out again, possibly a big bad news narrative, come down to around the 16,400, 16,000 zone. Possibly even dip into the 15,000s if we're early enough in the week to then close back above. Imagine the scary narrative, everyone calling for lower. That would be then the point, in my opinion, to start jumping back in and looking for longs. So yeah, really would not be advising to look for longs here, even though people will be doing it because of what seems to be a range breakout. But remaining level-headed, scrolling left and just looking at the weekly time frame, giving validity to this level that we've got drawn out, it really is perfect, in my opinion. So keep an eye out for that one. Just watch out for the move down, in my opinion. Look for this long liquidation level to get taken before then making a decision. That's what I'm going to be doing. So I can't tell you guys to do anything, but that is what I'm going to be doing. And then looking for, obviously you guys know the key levels that we've got to the upside marked out. You know the plan if you've watched the earlier videos. But on the shorter time frame, big bullish candles like this often can lead to, you know, imagine people that was buying this big bullish candle here, then got confirmation next week for only to come down like that the week after. That is sort of what I'm expecting here, but just not as big of a dump, and not to really break the lows. Just come in and take this liquidity and then set up the move to the upside to come out and take these short liquidations that are located right above this level. I'm going to change that to red, so we've got that as a key resistance level, because obviously if we do start coming, if you can imagine the market structure, come on, take these liquidations, just work in the ranges, take these liquidations, come back below. It's perfect for the market makers. It fools everyone, and basically everyone, every trader on the daily time frame gets wiped out here who are trying to make or expect big moves in the markets. So just having a look at that on the monthly time frame, you can see how these ranges might be worked as the months progress. Possibly with 18 days left, come down, take this liquidity, close back above, get back above this wick, and then start to work the ranges to the upside. And obviously, really, the next key level that I'm looking for is a trend line retest to the upside from these levels, something like that. The longer we take, the higher we're going to go, in my opinion, for the retrace to the upside. Key levels I'm watching for, if people haven't watched my videos before, this wick to wick here, key level, that's my upper target really for the upside movement from here. Get everyone back bullish again and then move to the downside. Work the ranges, just like we are on the lower time frame, working the ranges. Imagine that. Work the range, keep working the ranges, and just consolidate and have a moment like that in the market where people are getting excited and fearful again. So obviously these sort of, and this analysis works on all time frames, not just a lower time frame, but just trying to implement the same thing that we are seeing on the higher time frame to really get a second guess to how we are going to move in the coming weeks and months, because staying ready for the movements, despite how short term or low or high they go, being ready for them can just keep you emotionally stable in this market, and that's the key in my opinion, because overall we are expecting this move, but the downside move coming in on the short term, we don't want to be too scared about it. We want to be expecting it, and we want to be able to benefit from it. We don't want to be chasing. We never want to be chasing. We want to be buying the big bearish candles down here, in my opinion, and then selling the massive bullish candles to the upside as everyone starts to get excited again. And we are the ones that benefit from the market, and people who come in late, the speculators, the late participants to the market, the people who are trading off the news, trading off the mainstream media, trading off CPI, trading off narratives. These are the people that end up losing, and we are the ones that end up winning in the market. There is a reason why only 90% of people lose in the market and about 10 to 5% of people actually win in the market. And this is the reason. People get excited at the wrong times and people get scared at the wrong times. So stay unemotional. Try to stay unemotional anyway, because even though it is exciting, we see these projections to the upside, it's easy to get excited on these short terms thinking this is it, but really try to stay level headed and stay patient, because the market can stay as boring as it likes for longer than we can stay patient. So don't over risk, don't go over leveraged trying to catch every single bottom. Stay patient, and obviously I'll be here making these videos, so if anyone likes this video, give it a like. If you'd let me know what you're doing in the comments, and yeah, share the video, subscribe if you aren't already, and I will see you next time, guys. Cheers.